And with that, we will jump right in there. So this is the real estate roundup edition of the Coronapocalypse is what I'm calling it. And so we're going to be kind of asking the question, tap the brakes or double down. And so we have a whole cast of characters here that are going to talk to us about their opinions and their experiences. And I'll let each of them introduce themselves here in a minute. But before we begin, I want everybody to find the chat in the Zoom, co-host as well. Jump in there and type in your name, where you're from, and let me know what is your biggest struggle, concern, question right now, as we're all practicing social distancing as a result of COVID-19. And then share with us your biggest win, opportunity, or surprise that you found also as a result of social distancing. So, for example, I'm Paul Thompson from Little Rock, Arkansas. If you don't already know me, I'm a full-time real estate investor and real estate coach where I help busy professionals escape their day job using real estate investing. And my biggest concern is how much of an impact this will have on my tenants' income and therefore their ability to pay rent to me on my 40 or so properties that I own. And then on a personal note, my parents are both over 70 years old, and naturally I'm worried about them because they're kind of in that vulnerable age for this disease. Plus, I'm an only child and they live about 2 hours away from me. So what does that mean for me if they end up getting this and don't respond well to it? So that's one of my concerns. Now, on the positive side, I'm finding that having my kids at home has been extremely pleasant. There have been certain moments of challenge, but for the first time ever, I can actually see how people who homeschool pull it off. I never thought that would be something I would say out loud, but sure enough, it's possible. Plus, my skills in the kitchen have gone to the next level. I'm serving as Chef Paul, and I'm whipping up all kinds of tasty, nutritious meals at home. And so, share with me where you're from, biggest struggle, biggest opportunity. And while everyone is doing that, I'll share the format of tonight's webinar. So, I want to discuss what landlords and investors can do to mitigate the lack of income from tenants. I want to cover where everyone thinks the opportunities will be as a result of this for real estate investors. And then we'll shift into the Coronavirus Act relief, Economic Security Act, the CARES Act that just came out, the big stimulus plan. What does that mean for us? And specifically want to cover vacation rentals and Airbnbs. If you're doing that, what kind of adjustments you're having to make. And lastly, I want all of us to kind of pull out our crystal balls and make a guess as to how long this is going to last. So now I'll turn it over to each of the co-hosts to introduce themselves and share their concerns and struggles and their opportunities and surprises. So let's see let's go to first. How about ladies first? Mindy, do you mind going first?
Oh, yeah, I have to unmute myself. My name is Mindy Jensen. I am from Longmont, Colorado. I work at biggerpockets.com. And let's see, my biggest concern right now is people not taking this seriously. I think from the, not to get political, but from the very top down, this has been underplayed. And we're seeing all of these people dying across the world. You're not invincible, and you need to really take this seriously. And I see people like, I'll be going for a walk with my family. We don't talk to anybody except one family around the corner. And we've been like really isolating ourselves from everybody but them. And they're doing the same thing. It's difficult to see all these people not paying attention, not caring. Biggest positive is that now we have a lot of time to work on our house. We live in flip is our main source of investing, and we just bought a new house in September. So now we have a lot of time to work on it.
Well, awesome. Thank you for joining us, Mindy. And let's check in with Ashley. How about you? Quick intro, please.
Hi, I'm Ashley Kerr. I'm from Buffalo, New York. I am the co-host of the Real Estate Rookie podcast. I do buy and hold investing in Buffalo. My biggest struggle right now is if tenants will pay their rent April 1st. I have a property management company that I'm working with that has provided great resources for my tenants. We're going to be doing a credit to anyone that needs help. And kind of have them put together a little application to apply for this credit. But so that's my biggest concern, because we really won't know until April rent comes due if people are going to pay or not. But that's our biggest struggle. And for a positive right now, I have a lot of time to work on a vacant rehab. So my family has been going with me, and we've been working together, and my kids painted today, and it's been kind of fun to have that family time.
Put those kids at home to work. I like that.
Yeah. Instead of homeschool, it's work school.
That's perfect. All right. Ziana, would you mind going next?
Yeah, I'm Ziana McIntyre. I'm an Airbnb investor. I manage properties all over the US and Spain. It is challenging because no one's traveling. Some places they're not even allowed to legally travel. So that's really changed our properties. Biggest opportunity is taking the time to check out different avenues, renting kind of medium term. I'm doing a lot more with nurses. I never really needed to do that, but now I'm kind of looking down those avenues. And then I'm also educating myself on location rentals. So using my places for commercials and ads and movies and things like that, which can be a way bigger moneymaker than Airbnb is. And of course, it's not really happening now, but I can really take the time to educate and position myself for when we're back. So I'm pretty excited about it.
That's very interesting. Yeah, we're going to talk about that specifically later on. So I really appreciate you carving the time to be here tonight. Yeah. All right, let's go back around. We'll do it in the order people join. Dustin, do you mind going first?
No, not at all. Hey guys, my name is Dustin Heiner. I'm with masterpassiveincome.com, and I invest in single family homes. I love having single family homes and where rent just comes in and I have other people do the work. And so I've been doing that since like 2006, and I've seen an economic cycle come up and come down. Properties I still own from 2006, 2007, 2008, they made me money from that point to now. They're still making me money because of passive income and making sure I buy the property right, make sure I'm getting passive income every month, building the business first. So that's what I do. I love doing that. It's like one of my favorite ways to make money, but I also coach people and show people how to do it as well. So what I'm concerned about is, yes, I'm definitely concerned about my tenants. I want them to have quality housing. That's my goal, is to make sure they have quality housing. And I want to obviously be able to provide for my family, put roof over our heads, pay for food and all that sort of stuff. And so if they lose their jobs, or now they have lost their jobs, how are they going to pay rent? One other thing that I'm also heavily watching is the government and what each local city or county or even state might try to do to hurt. They're not going to try to do it to hurt landlords, but it will eventually hurt us. Like they say, you cannot evict somebody for 6 months. Like, right. Oh my goodness. Like I still have to pay my mortgage. Like I still have to take care of my bills. So I'm really watching for that. That's definitely a concern of mine. For me, on the positive though, anytime I see something like this, where there's a correction or a crash, like the stock market right now, anytime there's something like that, I am always on the lookout for opportunities, because there will be opportunities. There's going to be a bunch of negative things, downfalls of this, but watching for opportunities, watching for properties, even watching for stocks. I'll give you a quick little thought. So when the stock market literally just crashed in like 2 or 3 days, I saw a company, it's an entertainment company, that was literally at $70 a share. It was going flat, $70 a share for a long time. It went down to 22. Well, I bought it then, and now it's back up to 45 now. Nice. And so I'm like, I never buy stocks. I literally hate stocks, but I saw this. It's an opportunity. Let me throw a little bit of money at it. So I'm looking forward to opportunities that could come out of it. And just as long as we're watching for them, we can hopefully capitalize on those.
I totally agree. We'll definitely cover that in more detail from the whole panel. We'll swing over to Chad for a quick introduction.
Hey everyone, my name is Chad Carson, and I live in Clemson, South Carolina, small college town, big football town as well. And I've been investing for 18 years now. So I think part of what I can bring today, maybe to some people, is just perspective of we were young investors 4 or 5 years into our business when the last downturn happened, so 2008 and 9. And so I had some scars to prove it. And so it's been interesting to see some of the similarities and some of the differences this time around. I didn't mention earlier, I have a podcast, the Real Estate Financial Independence podcast that I host at Coach Carson. But one of the other things that concerns me is, in addition to the normal, I have a pretty good number of rentals that are just regular families and the jobs are an issue. I also am in the college student rental niche. Ooh. And which traditionally has been, sort of a recession-proof niche. But, now with students living at home, they're doing remote classes, like our town's a ghost town. And so we kind of have the double whammy of our students with their kind of second homes, basically going to be paying rent the same way a normal family would. And then if this thing goes even longer into August, September, October, the rest of the year, how does that affect renewing leases for the fall? So we've kind of, it's a big concern. And so it's kind of made me a little more pessimistic at this point, where I'm anticipating needing more cash maybe than I would have otherwise.
Mm-hmm. Yeah. Any positives?
Yeah, positives. I mean, it's same as any recession. If you can get through, if you have enough cash reserves, if you can withstand this initial kind of really negative period that we're going through, there's gonna be a lot of opportunities. And I don't know, I'm not good at predicting how many opportunities there'll be, but I know just the fact that there's the psychology of fear right now is kind of like the Warren Buffett quote, you want to be greedy when others are fearful, fearful when others are greedy. Well, this thing has flipped. The psychology of the entire country, the psychology of real estate investors have flipped. And so when people are fearful, there's just going to be opportunities. So, but I'm more of a survival first kind of person.
Sure.
because I bought properties in 2012, 13, 14, 15, 16 after so I didn't have to buy right at the recession. So I'm kind of more patient minded with the opportunities. And I don't think we have to be the first one to get the deal with the current situation.
Very good. Okay. We'll swing over to David and then Alex.
I'm the David Perret, the host of the Military Millionaire podcast. So I mean, like everyone kind of dealing with some of this. I mean, Dustin mentioned on his downsides the possibility of moratoriums for evictions. And I was a week and a half away from finalizing an eviction and got told that I'm not allowed to get rid of him until April 30th. And he lives in my 10 unit. So my biggest fear now is that I have this guy who hasn't paid rent in 2.5 months, who is going to be telling tenants in my 10 unit, hopefully not, that, hey, I haven't had to pay rent in 3 months and they can't do anything about it.
Mm-hmm.
And it's a C-class property. So, I mean, they're the type of tenants where if he says it enough, I would not be surprised if I have 3 or 4 other people that I get to evict at the end of this because they just realize, oh, I don't have to pay rent. Some of them are Section 8 though. So, no worries, or Social Security. So not a huge deal. And like the other gentlemen have alluded to, cash reserves. So downside for this, really my biggest fear is the one thing that none of us can control, and that's just how long this goes on. Because if this is a short blip, it won't really, I don't think it's going to affect the real estate market too much. But if this goes on forever, I mean, I've got I Airbnb 2 bedrooms out of my house, and I had 6 cancellations in a day and a half last week. And then I've had one couple came and they lived, they're going to probably move here for a month. And then I've got another room that I'm either going to do nurses, or, fellow Marines that are out here. So options are out there. It's just finding those. As far as upsides, I mean, I closed my first syndication deal with some people yesterday. So like there's still stuff moving. I finally got out from under a flip that went super south. So like I was still able to close per title companies, which is great because I know some people have had that issue. And then I'm going to hold that cash, sit back and relax. I've also done the Dustin Heiner mentioned stocks. I took some cash that I didn't know was coming. Like I got a check in the mail and didn't know I was getting a check in the mail. So I was like, I'm going to go gamble. And I threw it into a bunch of really big companies like cruise lines, oil, airlines, Boeing, whatever, that were all like, I got the most expensive of those stocks was 30% of the value it was in February. Most of them were 20 to 15%. So, I mean, I've already made 25% on where it sits now. So it's like, it's a total gamble, but if it goes back to where it was, I'm going to have enough money out of that, like $1,500 to buy a rental. So pretty cool.
Yeah. And remind us where you're from.
Oh yeah. Kind of all over. I grew up in your town, Little Rock. I'm going to retire in Missouri, and I'm currently stationed in San Diego.
Gotcha. So you're currently in San Diego, and that's where you're sheltering right now?
Yes. I don't know about sheltering. We're essential, which means we still get to go to work while everyone else doesn't.
Lucky you.
So,
lucky you.
It's more fun to be non-essential when you're salary because you get paid to stay at home, which is great.
Right.
But, I mean, I didn't lose a job, so I have no right to complain.
Sure. All right, Alec, last but not least, we'll go over to you and introduce who you are, where you're from, and where you're sheltering, and positives and downsides that you're seeing what's going on in your life right now.
My name is Alex Fleece. I'm a mostly rental real estate investor. I have a small multifamily apartment and a bunch of single families. I invest in Fayetteville, North Carolina. I started in Fayetteville because it was recession resistant because the largest U.S. military installation is here. And while the media is melting down, and well, if you look at the internet, you'd think that this is the end of the world. But business is going as usual for me, for the most part. We had a slight delay on one of my flips that I'm getting out of, and I expect no major concerns. I don't know if people are going to pay rent or not on the 1st, but I am not in this for the 1 or 2 year game. I am in this for the super long game. So 1 or 2 months of bad real estate is nothing to me. So, and look, everything is going to be back to normal for election day. So this is completely overblown, I think.
Okay.
I put an offer in on a large commercial unit that everybody else got scared of, that I really wanted, and we got it at a discount. We signed paperwork tomorrow or Monday. So I think this is going to knock out a lot of people that are really, really tight.
Yep.
But not many, because like even if you miss 2 mortgages, you don't get foreclosed. So I think it's going to scare a couple people that are like really, really tight. I think it'll scare off. I think consumer sentiment is still high right now, and that will change dramatically over the next 2 weeks as we find out how many rent checks got missed, and we find out how many mortgages are going to get missed, and we find out when quarterly earnings reports come out. So investor sentiment, like people are still joking about toilet paper and whatnot, that's going to stop. And then like Chad said, like, that it'll take a while for that momentum to get back up. But in the meantime, while public sentiment is scared, all of us are going to be capitalizing on, I think, easy opportunity, to be honest. I think this is going to be, and I don't think real estate's going to get hit that bad by this overall. So
let's switch over to this, and let's open this up to the audience here. And even if you're on the chat here, chime in your best guess. Pull out your crystal balls. When in the U.S. anyway, when do you foresee the social distancing protocols being lifted and people are get to go back to work and schools open back up? Anybody have any thoughts on that?
So I would like to see where it seems like the 15 days that was blanket over the entire country.
Mm-hmm.
The 15 days is going to be up on Monday. I believe it's Monday or Tuesday, whatever the day is. But what I would like to see, and I'm not sure if it's going to happen, but you kind of hear a little bit of talking about restarting the economy. Obviously, it's a halt. Like it's literally crashed. Not crashed, but like it's stopped. So restarting the economy. And what I would like to see, and what I'm kind of hearing, is start getting a little bit of the economy moving. Like get a couple businesses, or not couple, but like certain areas of the country, industries, and get them moving. Obviously, places like New York and New Jersey, where there's so many people affected, like are literally sick with that. It's surprising not many people actually dying in general compared to how many people are sick, which is great. But in the areas of the country where they're not that, like in Arizona, we have like, I don't know, 200 cases, 300 cases. I mean, and maybe 1 death. And so it's like, why is Arizona shut down beyond this when we could possibly open up? And the healthy people, I think, and it sounds like they might do that. Healthy people, get back to work. Like start getting back to work. If you are sick at all, if you're older, like if you're susceptible at all, stay home. We need to get this thing moving. I think that might be because in hearing a little bit in the news, they're talking about trying to slowly restart the economy rather than like, everybody go back to work. It's not going to be that. I think it's going to be, let's start getting some movement and momentum going. That's what I would like to see. I personally think if we go until like August or September with like this, it's going to be really bad. And so I don't think they want that, especially Trump. It's election year. He's not going to, I think he's going to say, hey, it's time to get moving. We got to get the economy back.
He's already said that
so,
by Easter,
yeah.
Right?
Yeah. So, I mean, just the big picture for me personally, I think that hopefully by May, we're really going to start feeling like, hey, we're okay. Summertime's around, not and as many people are getting sick. And so I'm hoping at the latest by May, we're starting to feel like somewhat normal again.
So I'm going to make you bet. Put a date.
On what would be the, because I can pick a date, but what's the ultimate thing? Like the complete
social distancing protocols are removed are stopped.
Trump usually does what he says, and so if he says Easter, I think that's when he's probably going to do it. But if I'm going to give like a crystal ball of, and I'm not going to bet on that because I'm just saying this is just what I see him doing. But crystal ball, that over $2 trillion of money being pumped into the economy.
Right.
That's really going to do a lot, as well as the interest rates from the Federal Reserve. Now, that doesn't affect mortgage rates necessarily, but eventually will trickle down. It will affect it somewhat. And so that, as well as consumer sentiment, it was really, really high right before this. And then ground to a halt. Yeah, I mean, it's like so high. Everybody's living high on the hog. We're doing great. And I think we're resilient. I think we're going to pick back up. And so I was actually interviewing somebody on my podcast and he was saying that he thinks it's absolute, like, this is the end, like this is the beginning, it's going to crash. I'm like, I just don't see it, especially with the $2 trillion being pumped back into the system.
Mm-hmm.
So that's my perspective. So I'm still thinking we still have plenty of time before there would be a
So
really
that was what,
bad,
April
like, crash.
17th, 19th, the Easter, whenever Easter is?
Yeah.
Okay.
That's what I'm thinking.
Okay. So anybody else have any other thoughts?
I'm going with May 15th to 20, I think it was the 25th, somewhere in that window. And I'm not going with that off anything other than that's when my social distancing ends, whether anyone says anything or not, per the DOD order. So stuck for 60 days. Everything is whether, so. And
Mindy comments that she doesn't see schools going back. And I tend to agree. I do not think this school year is over, and they'll let it go through summer, and then school won't be back until August at the earliest, or whenever your schools go back.
Yeah, that's what I think. I think that there's a lot of asymptomatic cases out there. If you follow the number of cases, it's getting bigger and bigger and bigger. And like every day, we had a record number of cases today, and we haven't even hit peak yet. And asymptomatic people, I saw something that I thought was pretty interesting. It said asymptomatic people, let's say you infect 10 people. You don't know. They, the next day, are shedding viruses, and they're affecting 10 people themselves. 10 times 10 is 100. That's in 2 days. That's 100 people. Is that happening? I don't know. I'm not an epidemiologist. All I know is that my kids aren't going back to school this year.
Yeah. Russell here comments that in Virginia, they've already canceled schools for the year. So that's the first announcement that I've heard like that. And
I think
that's
Vermont did too.
Vermont did. I think that's just going to be the way it is around the country.
My county down here did as well.
Yeah. It's just
same in Arizona here. The teachers literally were told, close down like it's the last day of school. You're not coming back. And that's in Arizona.
Wow. Anybody else have any opinions on a date? Chad?
Yeah, I think one of the things we have to think about, like the question we're asking, like what is back to normal either?
Mm-hmm.
Like I think there's going to be varying degrees of normal depending on where you are, and also depending on like if this thing has reverberations, if it comes back again.
Mm-hmm.
I just don't see any kind of normalcy anytime soon. That's my guess. Now I'm going to tell you why I don't think that necessarily matters what my guess is when I'm investing. But I think we're going to, I'm in a college town and have big groups of young people congregating. I think August, September is going to be affected. And I don't know to what extent, whether that means people are inside, not allowing any, having social distancing the way we're doing it now. I don't know if that's going to be the same, but I just think things are going to be impacted. Jobs are going to be impacted. Entertainment venues are going to be impacted. And so here's the big deal though, is like, what does that mean? Like, we have not seen anything like that. And so I'm a little more pessimistic because I think there's a lot of uncertainty out there, whether you think we should be going back sooner or not. Like, you don't even have to get political with this thing. You just need to think as an investor, like, what's the best case scenario? We've heard some best case scenarios. And I think we should plan on the worst case scenario and be prepared for that, because if you don't, you're going to be caught in a bad position. So I think the more important question as an investor is, like, what's that range? What's the best case? What's the worst case? The best case, we're going to be fine. The worst case, can you be prepared for that? Can you handle that? And I think that's part of my learning from the 2008-9 recession, was just there's so much unpredictability. We didn't know that a virus is going to be the thing that put us into a recession. Right. Just like we don't know how long this is going to last. So if things are uncertain, you've got to be prepared as an investor with a lot of cash reserves. And you also got to be prepared, like, if your industry, something changes, what's your backup plan? How are you going to make income here? What are you going to do if you can't evict people? Is there any other leverage you have with them? Can you talk to them face to face? So I think there's a lot of questions out there, and I'm leaning towards the longer, not because I know, but just because I'm afraid that if you're not prepared.
Yeah. I think Mindy has a comment, and then let's go to that topic, what to do if it lasts longer than, say, April. Go ahead, Mindy.
Yeah. So what Chad said, being prepared for the worst and hoping for the best is a far better option than just thinking it's going to be done in 2 weeks. I don't think it's going to be done in 2 weeks. There's a comment in the chat that says, my W-2 is a hospital. The climb in hospitalizations is scary. September 1. People are not isolating as instructed. That last sentence, people are not isolating as instructed, I think that's going to make this expand much further than 2 weeks.
I agree. Yep. Go ahead, Alex.
I agree that people are not isolating as instructed. And I think that people are going to find, I think you're going to find that it's incredibly hard to make people stay inside no matter what. And so people should, you know, this whole debate about should you stay inside and save everybody or should you go outside and risk it? I think the answer is humans are going to risk it no matter what. You're not going to be able to box them inside, not for any kind of long amount of time. And so to the and then we'll deal with the fallout thereof afterwards. But and then to answer your question, Paul, I think because I wanted to put a date on it. I can't believe everybody wasn't required to do this. April 29th, this will all be lifted.
April 29th, social distancing will be okay. So let's make everybody put a date out there.
There you go.
Make them. David, you didn't say anything.
So my DoD policy ends May 15th to 20th. Somewhere.
That's right. You did say that.
So no later than. But I agree. I think so. Not to say that the president, you know, is the economy, because I will never be caught saying that he's why the economy did well or why the economy did bad. But he does have a lot to say. His quote that we can't make the cure worse than the disease. I mean, he's an economic guy, so I do not necessarily have any. I'm not going to speak to any of the news that I've seen saying yay or nay about the virus.
Mm-hmm.
But I can't foresee that we're going to keep the economy closed, because whether the virus is still scary or not, if the economy doesn't exist, it doesn't necessarily matter to the vast majority of people whether they might get sick. Like Alex said, hey, you either pay your mortgage or you get a virus. I'm going to risk the virus.
Mm-hmm. Okay. Ziana, you have any thoughts on a date?
I wouldn't be surprised if Trump lifts it in Easter, but I don't know that it'll necessarily be safe or that anything would have changed. I think he might just do it because whatever. I don't think he cares that much. But I think at least in Colorado, at least in Boulder, a lot of people really seem to be taking it seriously. And so like, I wouldn't be surprised if people just decide to work from home for a long time. So maybe June or so. And then I don't know about normal. Like, I think it's never going to be exactly as it was. And so it's kind of like new normal, and seeing, our big long-term leases are in August too, because we're a college town. And so, I'm thinking about a couple of long-term leases that I help out with that I'm like, we should just extend them. Like, no rent raises, just lock them in now, because you don't know what's going to happen. So.
Totally.
See.
Okay. Ashley, I think you're the only one that hasn't chimed in on the date.
Yeah, I haven't yet. I think that everyone can go back to work, but I think it's still going to be recommended to do social distancing. Yeah. I think people are going to come out and say, okay, you need to change your office so that people aren't, right next to each other. And I think retail stores will be able to open. And I think it will be, I'll say the end of April, early May. So I'll say May 1st. That, retail stores can start opening again. People can go back to their offices. But I think this will be a long-term thing where people still recommend social distancing, still Perel everything, please, don't come in contact with older people still for a while. Sure. I don't think it's just going to be like, okay, social distancing ends today. Everyone go shake hands and be lovey-dovey. But I do think that like stores and the economy will open back up a lot sooner than later, with still the advice to, not be in close contact.
When will you be able to hug? So what's interesting about pulling on our crystal balls is we're not good at this as humans. I had a conversation. I think Zion and I we interviewed on March 10th, and we were both just like we don't know. We'll just wait and see. And it was within 2 weeks the entire world turned upside down. So it's really hard to say what's going to happen in the next 2 to 4 weeks with any kind of certainty. We can make our guesses. So let's talk about now. Let's switch over to this concept of April rents start coming in, and we see that some people are not making payments already, and then probably our worst month will be May, or the next worst month will be May. People not being able to pay rents. What are you guys seeing as far as policies that are being put in place by your property managers, or by you personally, by your banks, by property managers? I've already got information from all three of my commercial banks that I work with, that they will extend payments 90 days. It's a deferral program, and they just extend it interest only. So there's no payments, and then you just pick up in 9 days with your next payment, and then the payments just catch up. That's for commercial. There's a lot of talk about Fannie and Freddie. There being deferrals. You have to apply for it. What are you guys seeing?
So I I went on to pay one of my mortgages. Really, I just went on to get my property manager set up so she could pay it so that I can stop bookkeeping it. And at the very top, it had a question. It had a question like, need help with coronavirus. I was like, oh, I'm going to see what this looks like. So I clicked on it, and it said, are you going to be able to make next month's payment? And I said, yes. And then it literally just said, you have no problems. Here's a phone number for you to call if that changes. And I was like, I can't even see the rabbit trail, to figure out what they're offering. They wouldn't even answer. And then it was like, I called and it was like an hour and a half wait. And I was like, okay. So the only way I was going to figure out what my lender's policy on it was to say, no, I'm not going to make my next, it wouldn't even let me look. So I don't know.
Yeah, I've had banks reach out to me too. They actually called and said, this is what we are doing, that small local banks. If you need the assistance, please reach out to us ahead of time. And this was probably 2 weeks ago. I think I got the first call.
Similar for me.
Yeah.
Yep.
So most of my loans on my properties, we have some paid off free and clear. Other ones, we have a lot of private loans. It's just kind of the way our business has evolved. We have one commercial loan, and the rest are to individuals. And so it's a little bit of it's partly a strategy again. Like, we didn't want to owe money to a bunch of banks, particularly commercial loans where they can call it due and kind of control the conversation. But it's also interesting now because I'm even more motivated to make sure I keep making my payments, because these are individuals who are using this to pay their retirement. I mean, these are people I know, these are friends.
Right.
So I've had conversations with every one of them. And even I have not asked for anything. I don't plan on needing to ask, but they said, if it gets bad enough, let me know. We'll work it out. We'll figure it out. And so that's a positive to me. Like, this long run, when you're thinking about like resiliency of your loans, the banks could be generous. They might not. Sounds like some of them are right now, but the private lenders have been really nice to work with for me.
I'm glad you said that, Chad, because I have a very similar strategy. I haven't gotten a new bank loan in several years, and a lot of my properties are with private lenders. And the situation I have with that is, if I'm borrowing from somebody's IRA or solo 401k, and you are having real troubles with cash flows come April and May, you may consider talking to them and saying, you don't actually need the money now. I'm still going to pay you the same amount of money, but if I take a deferral and pay you later, then you're not hurting them. But that's a personal conversation you want to have with your lender, right? To see, because some of them may actually be depending on that that money. But if it's in an IRA or solo 401k and they're under 59 and a half years old, they make you wait for the payment because they can't spend it anyway.
Yeah, that's a positive. Yeah, I have some that are actually spending it, but he has a lot of money, and so it's not a big deal. So it's nice having that conversation with somebody with a self-directed IRA, because they're not. It's not like they got to use it to pay their bills type money.
And it's interesting because I never would have thought that there was a situation where I would have felt more obligated to pay a person than I would be paying an institution. I never thought that institutions would so naturally actively reach out to me saying, you don't got to pay, wait 9 days. I never foresaw that coming. And I'm with you. I'm nervous about commercial loans. Somebody said in the comments that they're about the credit crunch. And that's the big concern that they have, is there's a similar scenario from 2008. I don't sense that is the, crystal ball that I don't have. I don't sense that's the real concern that's going to happen. There's $2 trillion that just went into the economy that is going to trickle through, the government's going to make everything possible for them not to be able to call commercial loans or have a reason to call commercial loans. Ziana?
Sorry, I didn't think you were going to call me so fast. I was just getting a refi done, and we closed before everything changed. But the day after, I was talking to my lender, and she said that they're not allowing you to use your rental income anymore as income qualification for the loans. And so that's like a big change on the credit. And for a lot of people, that'll disqualify you from getting a loan. And then actually people keep thinking that the interest rates are going down, but not so much for mortgages because it's a lot more risk. So they've actually been going up a bit. So there are some things that are tightening up for sure.
Yeah, what's interesting is the Fed lowered the Fed fund rate to nearly zero, and credit rates actually went, or credit interest mortgage rates went up for a while. And I think over the next 6 months, 6 weeks or so, that will trickle out after the big surge happens, and then it'll have kind of a downward effect. Chad, you had a thought?
Well, I'm just going to add on to the refinance conversation. We have one loan that right at the beginning of this, we applied for a commercial loan just to have some extra powder on the other side of this. And I'll just be curious if it's going to close or not. Like it's a local bank, it's a commercial lender, it's the same one we've used for years. He seems to be very confident, but I just don't know. And if it does go, we're going to pull some equity out and just have it sitting there available, just extra money to buy some properties. But I'll be curious to see. I don't see the big credit freeze like we had in 2008 and 9, but at the same time, corporations, hard money loans. Like this week, I have some money with Pier Street and some of the other kind of little crowdfunding places. They've all pulled their hard money loans, and most of the hard money lenders I know in local towns are not loaning money. So that's, if that has reverberations all the way up to there's other lenders not wanting to loan money just because of the uncertainty. The same thing I'm hearing from investors is, let's not invest right now. Although I've heard some people are. Alex just bought a property. So there's different attitudes there, but a lot of banks are wait and see. How big is this? How bad is this? And so I'm just curious. I don't know for sure what's going to happen.
Alex, you had a thought?
There is going to be uncertainty in banking, and as the risk goes up, rates will increase for sure. Across the board, I think you're going to see rates increase. But I think the big difference between this and 2008 in real estate is that this is going to be highly regional. And as far as I can tell how it's laying out, it's going to be highly regional, where in 2008 it was quite systemic because it came from the mortgage-backed securities. So it trickled in basically from the core ownership of the banks, whereas this one's going to be much different. So I'm optimistic, but again, I said that from the very beginning, like my little where I invest is kind of like nobody in the Army is going to get a pay cut from this. So I'm fairly insulated. And so banks are going to do weird things where, yeah, they might give Chad that loan, but they're going to look at the income different. Like, so Ziona said, if it's from regular rental income, we're not counting that anymore. But if it's depending on what your last 2 years look like, the world is not going to end. The world is not going to stop doing business. I mean, people keep saying, oh, everybody's out of work. It's like, not the banks. The banks are all working full time. They're still doing loans. There won't be the liquidity crunch like there was last time. I was very worried in the very beginning because, look, people went bananas over toilet paper. And so when they realize that they're going to need cash too, they're going to go run into the banks for it. And so the banks are getting ahead of that by reducing credit lines, frivolous ones. And liquidity is going to get tightened up, but I don't think it's going to be like a seizure like last time where we had credit lines tighten up, banks had to do callbacks, calls, and all these other things. And to that point where you said about private loans, Paul, you said this to me like a year and a half ago. You're like, I don't like commercial loans. I don't like private loans because what if they call the bank? And I thought to myself, if anything ever happens, I'd rather piss off and have to not pay a faceless bank than have to pay an individual. So I'm glad this is coming back 180 on us right now. But hang on, I want to say one last thing. For anybody who does have a commercial loan, not a Fannie Mae loan, which is underwritten by the government and the servicer doesn't care at all whatsoever, but a commercial loan where the bank, the money is held at the institution that's down the street. Those relationships right now, like mine called me and said, because I have my 24 unit is on a commercial loan, everything else is Fannie Mae or personal loans. They called me, they said, same as you heard, 90 days. And I thought to myself, yeah, I could use that, but this is the time where they need me to step up just as much as I need them to. And so I'm not going to use that. I'm not going to use that privilege or that benefit unless I absolutely have to, because they need money too. And so I say this to anybody who has these commercial loans, like the bank is your partner, especially if it's a local regional bank where they're holding the money in funds in-house. So if you can help them weather, because we're all going through this together, if you can help them weather this storm by being a good investor in a solid business, then I think you're going to come out. I mean, maybe it doesn't matter, but maybe it does. But those relationships right now is the time, like they're going to have, like let them lean on you if you can, just as much as you need to lean on them if you have to.
I mean, paying them when they said you don't necessarily have to is probably the next best thing to taking them out golfing, which is how they normally network. I mean, my commercial lender, same thing. He's got 2 golf bags in the back of his office, but this is probably the best networking I can do for him right now, is just saying, yeah, I would understand. I appreciate you're going to get my money.
Well, the other reason you want to do that, whether it's a private lender or a commercial lender, is on the other side of this. Like, I know we hadn't gotten there yet, but if you have relationships where you've demonstrated that you don't need the bailout, I mean, that's basically your credit with that commercial lender or with that private lender. And one of the biggest, we did a lot of things wrong before 2008 and 2009. Bought too many properties. We, just bought some bad properties. But the thing we did right was we had a ton of good lending relationships, so that when we got to the other side of it, we were able to buy up all those great deals. And because we had demonstrated we could perform to those lenders. So I agree with Alex and say that's one of the most important things if you can do it. I mean, if you need it, you're about to go under, like, take advantage of it. But it's a good relationship to have if you can demonstrate that you don't need the extra months.
And that's why it's so important to have reserves, so that you can weather those storms. And that's right. You want to keep those relationships with the bank, because some of the best banks I found are the small little local community banks who, want to meet you in person, and they're just not looking at a file or asking you to fax some information. They want to know who you are, what you're doing. And so having those reserves so that you can keep paying them is really important. There's a lot of talk of, no money down deals. Like let's borrow 100%, but a lot of the successful people who do those no money down deals, they still have cash in their bank account, for when things happen like this. No one really, at least I couldn't have expected something like this to happen, where I was worried about tenants paying rent because of a virus.
And piggyback up off of what Ashley's saying, I wholeheartedly agree in having the cash reserves for your business, but also for your personal, just for yourself. I mean, if you have so much money coming out of your pocket every single month because of mortgages on your properties, I love using leverage to get properties, but I also realize that I need to have plenty of savings, because as I quit my job, it was just basically reliant on my business, on my rental properties. And so I knew that if something happened, like if my property managers, if they all went, they fell off the cliff or something, and I couldn't collect my rents, or something like this happened right now. And as recessions come and they go, and they come and they go, but if and when it does come, cash is king. And so on top of having reserves to provide for your mortgages, which is great, but also for yourself, but then also for opportunities that are going to be coming in the future. I know that I've been we know that recessions come and go, and the economy comes and goes, and it's usually about 7 to 8 years. There's a correction in the economy. It's been going up since the last crash in 2008. So what is that? That's 12 years now of continually going up. Now this, with the virus right now, is pretty scary. It is pretty scary. And so hopefully, if you're, everybody listening to this right now, hopefully you have a little bit saved up, an emergency fund that's for you and your family on top of your business as well. Because when it does happen where money starts to dry up, when I was about ready to quit my job, I bought a few properties and I was fixing those up, and I had a bunch of evictions at the same time. It was a perfect storm. And I literally, instead of getting thousands or like $10,000 in a month, I was getting like $100 checks. I was like, what in the world? That was so rough. And I learned my lesson from that point to start stocking away cash, because cash is king, and cash is what's going to help you in the times of trouble as well as when an opportunity arises. So I want to ask you, what do you guys think about if you have a property? Right now, hopefully we might still be able to get mortgages. So everybody here on the panel, I was thinking that the best time to get a mortgage or a home equity line of credit or something like that, to where you have access to cash, let's say specifically a home equity line of credit. Do you think right now would be a good time to say, well, right now I don't necessarily need, if they give them out, that's a whole, obviously, blanket statement. If they are still giving out home equity line of credits, is it a good idea to get one of those right now, so that in the future, when there's opportunity and you have access to the cash in your home or your houses? What do you guys think about that?
I had a home equity line of credit canceled because during the last recession, that there was no problem paying. My husband worked for the government, had a very high paying job, and we had no debt, and they still said, sorry, we're not going to keep this open. They closed the entire thing.
lines of credit can be called. But I have heard and read several HELOC since 2008 are written such that they cannot be called. That's not a government policy that I don't know of, but that was removed in the terms by a lot of HELOCs. But that's still not the case for commercial loans. They can almost all be called at any time.
Yeah, and this was the HELOC on our primary residence. I didn't. That was actually kind of a big shock to us when that happened. And I didn't know that they had changed the language in that. I would say, anything you're signing, you got to read all the way through.
Mm-hmm. Alex, you had a thought?
Yeah, as a banker, like again, a HELOC, just to say it out loud, like a HELOC is a second position on a house you live in generally. So they're not, if you miss the payments, it's gonna be very hard for them to get that house. And so they can be kind of frivolous and giving you that equity because for the exact same reason, they know it's in a house that you live in. But in times of high stress and times of high uncertainty, even if they don't call a HELOC, what they're going to do and what you're going to start to see right now, because to answer your question, Dustin, if you can get a HELOC right now, you absolutely most certainly should, to be sitting on the dry powder. But the odds of somebody giving you a HELOC right now is plummeting by day because it's equity. It turns into cash. Like you said, cash is king. Well, it's the same for them. So any cash that they don't have to give out right now on a whim, on something that they know is a second position loan to get back if it goes bad in a high risk moment like this, it's like an unnecessary risk to take. So if you can get one, go for it. If you have one, what I did was I went to all my HELOCs and I grabbed the cash out already, because what they're going to do is they're going to seize them pretty soon, and some of already have, and credit cards too. Like if you have credit cards, they're like, yeah, whatever your limit is, you can't have any more, or they're going to start hacking off limits. So you'll start to see that because they don't want to have to give out the cash for, when they may need it.
Yeah, I closed the house yesterday and was planning on dumping all the cash back into my HELOC as I normally do, and instead it is going to sit somewhere completely different because the $200 or $300 I pay in interest that would disappear for the HELOC is completely and totally worth ensuring that I have cash on top of my reserves, just because there will potentially be an opportunity.
Mm-hmm.
Yeah. I was going to echo what David said. Like, don't look at that short-term interest right now if you are underfunded. Like if you look at I think the most important message I could give anybody right now is if you look at your reserves and you don't have enough reserves right now, you need to fund that however you can. If you have to draw money from a HELOC, do it, and don't worry about that interest payment because it's a risk reward. It's like you're playing poker right now. And even if it's a small chance that we have to go 12 months with this thing and you don't get rent for it, it's just sporadic. The negative of that, if that happens, very small probability, huge negative for your portfolio. So having cash right now is the premium thing to do. And that's why banks are pulling it in. That's why businesses are pulling it in. This is the part that's not unique to this situation, is that every time we go into a recession, it's all about debt and the money supply. And if some of those like big national things that are being done now where they're do $2 trillion in stimulus, that's really big. But there's also another amount of money that's being printed, with the quantitative easing by the Federal Reserve. So this is really a money supply game. And so the federal government's doing that. Big businesses are doing that. You should do the same thing. You should have as much liquidity as you can, especially if you don't have 6 months or so of reserves set aside for your personal and business. Do whatever you can. I even would say, if you had to like sell something, if you only had a couple months of reserves and you were in a really bad shape, you need to get some of that quickly. And then once you get up to that kind of threshold, then you can sleep a little bit better at night and start thinking about opportunities from there.
Yeah, let's take a little switch here and talk about what to do for the investors that are probably listening to this that have rent checks coming due April. Hopefully they actually show up, and kind of the mitigating strategies that we can do. One of them is getting a HELOC, maybe taking a loan against your 401k. If you have a cash value life insurance plan, you can take a loan against that. What else can people do as far as about getting more cash in from their tenants or incentivizing them to actually pay rent, assuming they justifiably have the income?
Can I throw this back at you? I would be curious to hear your thoughts, because I was talking to someone the other day who said that a lot of people with this are very, very, very skittish on 401ks and IRAs right now, and that this is the same kind of crash that would make people think about pulling. And they were telling me this as you should probably be looking for private lenders who had their money in an IRA and do not like what just happened. Now, I personally wouldn't touch my IRA right now. I would wait for it to come back up. That being said, would you, since I know you're a big IRA investor, is that something you're going to start looking for? Is like, well, man, I need cash. Like, I know people who will lend me cash at fixed rates.
Yep.
That could be a very solid strategy.
That happens to be my business philosophy period. But before this is I do a lot of deals with other people's IRAs and 401ks. The comment that I said was, for your own 401k, you can take a loan against it up to one half of its value, or $50,000, whichever is less. That's a good way to gain access to capital. Mindy?
Yeah.
They just raised the limit to $100,000 for that loan. And
That's right. As a part of this, as the stimulus, they sure did.
Yes. And you have it 3 years to pay it back instead of 2.
Yeah, and that's not actually a loan, though. The loan stays the same. With the CARES Act, it's $100,000 that you can take tax-free from your 401k or IRA and use it. And go ahead.
I'm sorry. It's actually different. The 401k is a loan, and the IRA is you can take as a distribution.
As cash. Yeah.
Wow, that's big.
And both of those you get for the low cost of 70% of what it was worth last month.
If it dropped in value, if you had it in some sort of stock that has dropped, absolutely. If you had it in cash or real estate or loans, like what me and Lindy do, or Mindy do,
absolutely.
It's a good name for you, Lindy. I like that. You could take that cash that you normally would have been doing loans out of, or private loans, and you could take that out as cash, do what you want with it, and then put it back within 3 years for your IRA.
Within 3 years for your 401k. It gets into the weeds. I talked to Natalie Colity today on a very botched Facebook Live that we did. And the 401k is a loan. It is not a distribution. The
Correct.
IRA is a distribution, or if you pay it back, you're right, within 3 years.
Tax-free.
It's tax-free if you pay it back, and it's penalty-free because of the stimulus package. On both of them, it's penalty-free.
Right. So devil's in the details. Go do your own research, talk to your tax person. But the point is there are assets that you have access to now over and above just your home equity line of credit or your current portfolio that you might be able to tap into in ways that you didn't have before. And I think, David, you were saying kind of your larger question was, okay, is this a time to go try and raise private money? I think it's always time to go raise private money. And this is definitely an opportunity for people who have lazy money sitting in their 401k IRA that wasn't necessarily in the stock market before. Typically, the older you get, the less you're in stocks, and you're in a situation where you can take distributions from it without taxes or penalties, but you still have it in your 401k. You could do private loans out of there. Usually I do somewhere between 8 and 10% interest only. That number may actually go down now, considering how volatile it is. If you could give somebody a loan for 8% right now, would you not be the happiest person around compared to what you're getting in the stock market? One of the private lenders that I work with called me up the day after all this stuff went down. He says, I'm so glad we did that deal last week, because I'm paying him 10% interest right now. And he's like super happy about it, because compared to what he got in the stock market last week was 10% was much higher. So yes, the short answer is go and raise private money.
Yep. So, and then to answer your question, since I did, I guess, pipe up first, I always use my TSP 401k as my cash reserves. I've never touched it. I don't plan on having to touch it this time because I have additional cash reserves, mainly the sale of that house that will, it won't go into my HELOC. And then I'm just going to sit on that, taxes and whatever. I'm just going to sit on it. And then as far as mitigating, I'm going to, lock my eviction tenant in his room so he can't talk to my other tenants. And then, hopefully he quarantines, but he doesn't strike me as the type to care about social distancing. So, but I mean, really just playing the game. I mean, we sent out a letter to everyone, let them know everything's okay. Try to do the opposite of what the media does and not fear, play on fear and anger, and just tell people like, look, this is not, Springfield has not been hit that hard. Everything's gonna be okay. You're gonna have a house. It is what it is. If I have to defer payments, I will. I'm not gonna waive payments. I don't plan on it. Deferring, I don't care. If you pay me back the $500 you missed this month over, 3 months, great. Like it all evens out in the end. So that's kind of my strategy on this. And then realistically, I think the strategy on this for me is the same as everything else. Real estate's a people game, talking to people and just being real with them, right? And at the end of the day, I have no problem putting my foot down. I usually do that through my property manager, but that putting your foot down with your entire tenant base means I may not have lost someone through an eviction this time, but I will when their leases come around to renew if I'm the terrorist landlord. Whereas I could very well just play this as the nice guy who's like, look, I got you, but we're going to work together on this, but you're still gonna have to pay. So I think there's a balance there.
Go ahead, Chad.
I'm going to piggyback on the person comment David made, because in addition to having cash reserves, the other thing that really helped me in 2008-9 was having these relationships with lenders and also relationships with tenants. And I really don't know how this is going to go with April rent, May rent. I mean, it's all of us are kind of guessing at this point. But I did one thing. If any of you are personally managing your properties, like I have a portion of mine that have a property manager, so it's a little bit different in that case. But I have another portion where we manage them and they pay us. And about two and a half weeks ago, I reached out, I texted every one of them, got in touch with them, just how are you doing? What's going on? Had nothing to do with the rent, just so that they know I'm there and I care about them and I know what's going on. And I think you can use that to your advantage in that you're a person, they're a person. And whenever you do have to get to a point where they can't afford to pay all their rent, I think it's going to be different. They're going to, on the whole, most tenants, there's some bad tenants, bad apples, but on the whole, they're going to want to pay somebody they know and like, who's a real person who has to pay their own bills, compared to the big institution, the big bank, or the big, huge property manager kind of person. So if you are in that boat, I think that's an advantage to you. And so reach out to your tenants, be a real person, talk to them, and just, you're in this together, and you might have to put your foot down at some point. You might have to say, no, that doesn't work. But I think that's if we can't evict people, what other leverage do we have? We have the leverage of just being a human being who can talk to people and let them know, hey, we need this money. Like, we got to pay our bills. This is how I keep my lights on. And they're going to, they're not going to pay more than they have, but they're going to be less likely to go spend that money somewhere else than they are paying it to you.
And furthermore, remind people of the CARES Act that just came out. Like, I can calculate for you how much money you're about to get, and I can probably find out what the date is.
Right.
Yeah. So a family of 4 who makes less than $150,000, which is probably most of your tenants, was going to get, what was it, $3,000 whenever the checks come through, and most of it will come through direct deposit. You say 4,000, David? 3,400.
So I want to touch on what Chad talked about when he said what he learned through 2008, 2009. So I wanted to share what I learned, and the biggest thing for me, and the reason why I make money from when I first bought the property to what I make now. And with investing in real estate, if you're going with, we're talking a lot about rental properties and having single family homes. Airbnb, it's a whole different ball of wax. Obviously, we know with people not traveling and everything. But if you're having single family homes that are long term, it's trying to get as much money in passive income every single month that can mitigate these problems. Like, I know of some investors that would buy a home and they'd be okay if they made $50 a month in passive income. For me, that's not nearly much. And so if you even just did $100 a month in passive income, that's only $1,200 in profit for the entire year for that one property. And so with that, even if you just have a furnace go out, that's majority of your profit already taken up there. I know you have reserves, but what if a roof goes out? And we need this money to live on. And so from 2006, 2007, 2008, when I started buying properties, I made it a goal that I was going to have a minimum of $250 a month in passive income. Or I wouldn't buy the property. I'd do everything I can to try to get it as low price-wise so I can make sure I'm profiting $250 or more, or I just find another property. And so that's one big thing that I learned, was that I needed to make sure that I got at least $250 a month. Because when you think about it, that's $250 a month. That's $3,000 a year in profit. That can go a long way, especially if you have 10, 20, 30 properties. That goes much, much further. So I like to get as much passive income from every single property, because appreciation is great. It's like icing on the cake. But I and my family, we live on the passive income. And so trying to make it as much money as possible. I always tell myself and teach my students, $250 is a bare minimum, that if it's anything below that, we need to pass or try to get it lower.
Yeah. Would you rather have 10 properties making 250 a month or 40 properties making 100 a month? Like 40 properties is a whole lot more work than 10 properties, right? So I think what you're saying is your underwriting got much more strict, which is what you're
Much,
finding
much more.
for the property managers now. They're, for the banks right now. And so you as an investor right now, your underwriting should be tighter because there's still deals out there. If a good deal is a good deal, but make sure you're buying a good deal and not a thin deal.
And
And
you
make
had
sure
you had a
you
great
have
point that
reserves.
they're reserves. But yeah, you're absolutely right with that. You had a good point that there are still deals out there. I know I talk to a lot of people and say, well, where I live, there's no deals. Like, yeah, of course. If you're living in New York City, yeah, there's not gonna be any deals.
Mm.
But all over the country, there are plenty of deals. You just gotta work a little harder because right now it's not like 2010 where deals were everywhere. They were literally trying to give them away back then. But you have to work a little harder, but they're still out there. I have students that are still buying the properties and they're making $300 or $350 a month in passive income because they're finding the right deals. They're negotiating. They're investors. If you're an investor, you're going to get the price as low as you can to help you and your family. And you're going to try to make sure you get good tenants in there, screening them and all that good stuff.
Mindy, you were saying?
I was just going to say, not only yes, there's good deals out there still, but you have to be underwriting them even more tightly than you were before.
Mm-hmm.
And the banks want you to have 6 months of reserves, have 12 months of every single payment that comes out of somebody's pocket for that property for the month. Your pity loan, your insurance, I guess that's part of pity, utilities, lawn maintenance, anything that you have to do to the property or pay for the property needs to be in cash, sitting in a bank account, not in the stock market, not all locked up someplace else, in cash right there, because you don't know if your tenant is going to move in and then stop paying you rent.
Yes, I totally agree. So I'd like to switch the conversation to the opportunity. Where would you say the opportunity is? Let's say you're in a situation where you can survive this. You're not scraping for the next payment. You can handle April or May not being as robust as you were planning on. But there's now potentially new opportunities. And anecdotally, I'm finding that the number of buyers out there are going down. So my competition just ran away. And so I'm able to get deeper deals, and I'm doing subject to the existing mortgage and owner financing deals a whole lot easier now than I was just 2 weeks ago. Mindy, you raised your hand?
Yeah, I am in Colorado near the mountains. And when I moved here in 2012, there were several deals that I didn't have the cash to buy. If I had the cash, I would have had a easily $1.3 million house for $400,000 because somebody walked away with the kitchen. Kitchen's not, what is the difference in that math? 700,000? I can't do math that quick. 900,000? It's $900,000. It's not $900,000 for a new kitchen. There was a ski condo in Breckenridge for the first $200,000 that came by. And I didn't have $200,000 liquid enough to go up there and buy it. Somebody else got it. That's a $500,000 condo. So I am looking to the mountains right now because, yes, Airbnbs have dried up. I'm looking in the comments. There's a lot of Airbnbs that have dried up, but I can afford to sit on it as a long-term rental for a while until the market comes back, the Airbnb market comes back. All the ski resorts are shut down. There's no skiing. I don't know, Ziana, have you heard if they're going to have skiing at all for the rest of this season, or is it just done? And it was such a good snow season too. It's done. Oh, it was such an amazing snow season. Every other day was another foot up there. But I'm happy to sit on it and wait for the market to come back. So that's where I'm looking.
David?
I joked about this last night on a recording I was doing, but I posted on Craigslist all over my markets. As far as my initial thought on this is, all of us are worrying about what happens if our tenants stop paying rent, right? So is the mom and pop landlord who wasn't thinking this through properly. So I think the first person that I foresee potential opportunities coming out of is people that have equity or did not, that maybe people who are close to retiring, and this is the over the end, but like the people who just don't have that runway. So I immediately put a Craigslist ad out and I started targeting like, hey, I'll buy your house subject to, I'll buy your house seller financed, need help with your mortgage, that kind of stuff. Because I could see that coming very quickly as a knee jerk. I mean, people sold their stocks when a 20% hit. happened because they were worried about what if it gets worse. I foresee a lot of landlords that weren't set up very well potentially running into the same knee-jerk reaction of selling. And then also for immediate opportunity, there was a couple properties that I had made offers on throughout the last year that are still in the market. And so I think that I will readjust a little bit lower and make similar offers, because I think those properties that were sitting on the market for a long time, they're probably going to try to just get rid of it as fast as humanly possible now, or pull it off the market. So if you could, now might be a good time to throw some 50% offers at properties that have been out for, 200, 300 days on your market. Those are my first two thoughts. And then long-term, holding the cash, the goal will be that the people who went crazy and bought 5 cap rate multifamily properties in my market, which is not a 5 cap rate market, will be looking to sell those at 7 or 8 like they're supposed to be, because they can't maintain. And then I will be able to get into some larger multis at the proper price for my market. So
yeah,
Excellent.
I had an interesting kind of thing like that happen a month ago. I found on Facebook Marketplace a commercial building. It was 2 units, but the owner owned the building and the laundromat inside, and it's been something I've been looking for. And I messaged through Facebook, and it was the son-in-law trying to sell it from him. And so he gave me some information on it, went and looked at it, and I wanted to get financials from the owner, talk with him more. His son-in-law gave me his number. Never heard back from him. Well, guess what? He called me today. He's willing to do seller financing. He talked about his high-end homes he owns in Florida that, he just closed on another one a couple weeks ago, and the value he already thinks went down. And it was just very interesting how all of a sudden he became very motivated this week. But I think there will be a lot of opportunities like that. And he did say that he's trying to retire. He has another laundromat he's trying to sell too, that he's going to start being more active of getting rid of it. And I'm sure his retirement accounts haven't been that great. And the area he's in Florida is very high end. And it's a lot of seasonal people who come just in the winter. And that's when he gets his best rents.
I have a friend who runs Laundromats 101. I'll connect you with her. She's trial by fire. She's owned it for about 5 years and is really killing it in her laundromat.
Okay. Yeah. Thank you.
So we have a specific answer. I'm still learning how to use Zoom here, and there's actually a question and answer format here. And we have one from Ryan. He says, I'm 17, which is amazing that he's 17 and thinking about investing, from San Diego right now. And how do I find deals and manage it virtually? I'd prefer to do a deal to be in San Diego, but of course that may not be the best since it's San Diego right now. But you might be able to find deals right now in a way you couldn't have a few months ago. And what is the fundamental question is, how do I find deals and manage it virtually? And several of us, we help teach how to do this. So like David just mentioned a really good one just then that I've been using for a while, that I have been kind of, even before this, I've kind of restarted, and that's the MLS. Most people say MLS, you can't find a deal anymore. And that was true. It's harder to find a deal, but he mentioned something really perfect. Look for listings that have been on the market for 90 days, 120 days, whatever your threshold is. And you might be able to find some really good deals right now on the MLS that way. Go ahead, Mindy.
Paul, are you a licensed agent?
I'm not.
Oh, how are you finding deals on the MLS? Do you have an agent?
I have an agent, and I say this, I will send them a letter of intent. And what I do is I make offers on properties that are over 9 days. Me and my business partners do this, and we send offers that are 9 days or longer on days on market at 60% of the sales price or 60% of the ARV, whichever is less. And we just send letters of intent, all cash. Boom, boom, boom. We might send 80 sometimes a week. Go ahead, Ziona.
Do you do that through your agent, or do you write up the letter yourself?
I send them a format of the letter. I email it to them, and they just forward it on to the listing agent.
Okay.
I was going to just say, like, if it's your first thing and you're 17 and, you just want some guidance, I think there are a lot of great turnkey providers out there. And I know it's not like the sexiest thing to say, but they can offer properties as low as like $60,000 properties that don't have a lot of, cash to get started, but they come with a property manager, a tenant in place, already rehabbed. It's harder to do all that stuff afar if you've never done it before and you're, doing mailers and all kinds of stuff. So sometimes it's like, get your first place, learn how to manage a property manager, like make all those mistakes and then, you know, get better each time. So
I was going to say, you mentioned virtually, and I would be curious to know why, like, you know, what your plan is, what you're trying to accomplish. But when I think 17-year-old, I know a lot of us are kind of house hacking fans here. I've been like on the soapbox about house hacking for years. But to me, like, if you want to learn the business and you want to solve a major problem that you have, which is you got to live somewhere, like house hacking is the best way to get in the business and learn, and also reduce your housing expense, build a good solid financial foundation. And if you're in San Diego, I mean, maybe we do have a good price opportunity here in the short term that you could find a deal that otherwise, like a little duplex, triplex, is at just a lower price than it used to be. And I'm not sure what your income is. I'm not sure where your job's coming from, but you could get a loan on a triplex or duplex and live there, rent the other part out, maybe rent some bedrooms out in the part you're in, and really generate some income on a property that you buy it this year at this really good opportunity. 5 years from now in San Diego, with that kind of appreciation that you have sometimes there, you could have a huge, opportunity to build some wealth while you learn the rental business. So I guess I'm personally more gravitate towards that as a first deal.
As a 17-year-old. Yeah,
as a 17-year-old, instead of trying to do the virtual. I mean, there are some good options out there, but I think you will learn so much. And as a 17-year-old, your knowledge is going to compound and compound and compound. By the time you're 25, you're going to know more than any of us up here on the panel. You're starting so early. So that's really cool.
Yeah, and Mindy makes a good point that he's 17. So I mean, he probably isn't bankable right now. So using somebody else's loan, like you go in together with somebody else's loan, let them get a Fannie Mae loan, and you're a partner in it, is one option. And in San Diego, I have recently found out that they have reduced the requirements for auxiliary dwelling units. That's a big opportunity in San Diego. So you can do an ADU, and so you can have a Airbnb or just a long-term rental in your backyard. It's a 1-1, and you have a property that's a little bungalow, 2-1, 3-1, 3-2, and have a 1-1 in the back for additional income to house hack.
Is Ryan the one that did the question? I saw he just wrote in the comments. Okay, he said probably going to do an LLC with my parents. If I were you, I would keep it in your personal name and get an FHA loan, so you only have to put 3.5% down, and if maybe your parents would co-sign that loan for you if he's going to be living there. My sister and I did something similar. She actually got the loan, but I gave her the money for the down payment, and then we're 50-50 on the deed. So I'm not on the loan at all, but you could kind of do the opposite with your parents, where you're both on the deed and then maybe they're on the loan. I'm not sure how that would work with FHA if your parents aren't technically living there, but I'm sure there's other loans you could get.
The cool thing is Ryan didn't mention any of his story, but pretty smart kid, done a lot of stuff previously, would be able to foot a down payment due to previous endeavors. So Ryan, hit me up. We'll talk. Let's we can't grab lunch right now, but we can grab lunch to go and
y'all have a virtual lunch.
Sit across the patio from each other. I don't know. We'll figure it out, but hit me up.
We've been having virtual lunches at work. It's really nice.
So one thing I want to share with doing something, as you say, virtually, it's basically, investing far away from you where you're not going to be the one managing it. So what I like to figure out first is building the business first, as opposed to finding the property. So the easiest thing is to find a property and to buy the property. It's really not that hard. I know it seems a little daunting if you've never done before, but that's really the easy part. The hard part is building the business. Now, let me give you an example. So if I were to start a convenience store, I'm going to go find a location, but I'm not going to just open up a location, put a box of candy bars inside of that business or inside of that building and hope to run a business. It's not going to work. You're going to get the gondolas, which are the shelving units. You're going to get countertops. You're going to get fountain machines. You're going to get the cold storage. You're going to get employees and bank accounts and registers. You're going to set up the entire business first before you get any inventory. And so what I like to have, from my perspective, all the 30 plus properties that I have, they're all literally a piece of inventory that I put into my business that I've already created. So if I'm investing in Ohio, which I do, I actually don't fly there, but I build the business first and hiring property managers, getting contractors, realtors, inspectors, even wholesalers. I love building the business first so that when I do find a property, I have so many other people on the ground there that will make sure that it's a good property, that I'm going to be making money, that I'm not going to be buying in the wrong area, all that sort of stuff. once I have that business built up, then every property is like another candy bar or another piece of inventory that I'm putting in the business. So that's my biggest suggestion for you, is to make sure that you're going to actually have the business built up first before you buy the property.
And someone asked for your info. Dustin, I'll have all you guys give me information, and I'll send out an email to everybody who attended or everybody who registered with everybody's information. So if you want to reach out to any of us afterwards, you'll be able to do that. Somebody raised their hand. Was it Alex?
Yeah, I did the same. Like Dustin's right in this regard. Like for long distance investing, although I have to admit at 17, you're so flexible. Like, dude, if you want to invest out of state, just move there. Jeez. I mean, that's the time to do it. But if that's not an option or you're unwilling, long distance investing has, I don't know, just to basically say what Dustin said, but fancier. Building the team is what matters, because you're not going to see the property. You're not going to you're not going to go to the property. You're not going to fix the property. And so really it's a much different form of investing, because you're not really investing in real estate at all. You don't even have to see the property. You're investing in people 100%, and you become a manager of those people. And so they're different skill sets, and you can get good at either of them. But to piggyback what he said again, it's like, make sure I never look at a property and decide what it's worth. I ask the realtor on the ground what it's worth. I never ask or try to decide what it could rent for. I ask the person who's actually going to be doing the property management what it'll rent for. And then I ask the contractor what the rehab will be. So the only decision I ever make on buying long distance properties is what I have to pay for it, because I already know what the person who's going to manage it's going to get in rent. What the ARV for the bank is going to be, because I'm going to refinance and do a BRRRR. I already know what the ARV is going to be because the realtor said so. And I know what the rehab is going to be because the contractor said so. The only thing I have left to do is make the offer. And so it takes all the legwork out of, is it a good deal? It's like, dude, I don't have to decide. I just have to make sure I have people that I know that I can trust or rely on.
Very good. Okay. So for the interest of time, let's switch topics. And I want to go over to Ziana and talk about what she's doing with Airbnb. And then after that, we'll talk about SBA loans. So I want to make sure and cover that before we leave. So let's switch over to Ziana. So share with everybody what your business model is and what you've been doing in the last 2 weeks to adjust.
Yeah. So I manage a bunch of Airbnbs. So I own 7 of my own, and then manage about 25 generally. They kind of fluctuate depending on time of the year. And they're all over the country. And so I kind of talked to you on the 10th, and I was going like, yeah, I've seen a couple cancellations, but no big thing. The next 3 days or something, it was just like everything fell off the books. It was just like a shitstorm. I don't know if I was supposed to say that, but that's okay. Anyway, so now we've been trying to get longer term tenants in place everywhere. There's quite a few 2-week bookings popping up, and every once in a while, a month or so. And I've been kind of switching to other means of finding tenants. So Craigslist, Zillow, Furnished Finder, which is more medical professionals, and they generally have 3-month contracts. So that's really good. But we are seeing our rates go super low. So it's kind of like the worst of the worst. It's really just a strategy of like, fill it and then we'll deal with it. Most of my places that I own are paid off, so it's not really a big deal. But we're still paying utilities and everything. So I definitely want people in place. Yeah. So it's just about being creative and being flexible and going, okay, what's happening this week? Let's think on our feet and make some moves. So I don't feel distraught about it at all. I just know that let's just tread water until people are traveling again, which I'm so pent up. The moment I can travel, I'm getting out of here. So I imagine a lot of people that still have jobs are going to feel that way too. So I don't feel too bad about it.
Yeah, I totally agree that there was going to be a resurgence whenever this does lift, whenever we all got it wrong and it's a date none of us said, and there's going to be a pent-up energy to go out and do things. Restaurants will be full again. I mean, I think it will pick back up fairly quickly once it's up. Hopefully that doesn't cause a resurgence in the spread of the virus. We're going to do it again later on. But what is interesting about Airbnb specifically is it's none of us could have predicted that there would have been a complete shutdown of travel almost entirely. It's a black swan event that you couldn't realistically have planned for. What I'm seeing people do, which is interesting is similar to what you're saying is it's okay. Well, we depended on Airbnb for almost everything. Now let's go to VRBO and finders and traveling nurses. And there's even something that Airbnb is doing. Have you heard about the open homes program as far as with the COVID-19 relief, where you can actually offer up your empty Airbnb for health professionals?
Yeah, it's not such a great deal because they require like really strict cleanliness
Cleanly,
practices,
yep.
which, you know, we're going to do anyway, but some of it is just really intense. And then they also require 3 days on the front and back of each reservation.
Of the transfer.
Yeah, and a lot of us can't do that. It's
Can't
like,
accommodate
why
that.
have a bunch of blank dates all over the place? So I have signed up some of my properties for it. I'm going to see. I haven't gotten any bites, but some people are offering their places for free, and I think
Sure.
that's just cool, good Samaritan stuff if you can do it.
Yeah, some people. There's this link I just provided. It's a place you can donate if you want to, because it helps. Not the Airbnb. It's not to Airbnb, the host. It's for Airbnb to switch over and help accommodate medical staff that needs a place to go that is clean, secure, and a place to sleep after having a long shift. Or you can, if you're a host, then you can donate it, and you don't have to charge, but you can. And if you do charge, they waive the Airbnb fees, if I understand. So it's just maybe another option to look into if you've got a few Airbnbs that are empty. Go ahead, Dustin.
So I've always wanted to do Airbnb. I have plenty of properties, and I was thinking, it'd be great to do an Airbnb in one. I just never pulled the trigger. And it was just because I knew that I had money coming in every single month. I still would like to do it, but Ziona, you're definitely much more of an expert on me than Airbnb. But it seems like the Airbnb model for me, if I did get into it, it maybe be at most 20% of my whole portfolio, just because we live on the money that comes in. And so I like the idea of Airbnb because you get paid per day as opposed to per month, which is fantastic. I love that idea. So I'm just thinking, I'm really glad now that I have everything in, seriously long-term tenants that are great. But it does seem like, hotels, they dip in a recession because people don't have money to travel. Airbnb, we've had such a great market for 12 years since the crash, and now it's doing really, really well. How are you able to? Are these properties? If you don't have a mortgage on it, that's fantastic, because then you could just literally get a long-term tenant in there and still be okay. So I'm just curious about you. How are you able to, if this does go on for, God forbid, 6 months or 8 months or longer, where the people are still not traveling and the economy's still floundering and nobody's traveling to, on vacation. What are your thoughts there?
I'm really confident that I'll be able to fill the homes. So that I'm not worried about at all. I've found that they're listed for just a couple of days, even on Craigslist, and they get pulled. So I think no matter what, there's always demand for furnished homes, and they pull a bigger amount than anything that's empty. And so I don't feel like it'll be a problem. I definitely would love to talk to you more about the pros and cons of Airbnb. There are a lot of hidden expenses, so I don't think it's as sexy as it was. I've been doing it since 2012, I believe, and like 2014 to 16 was like crazy profit margins, and now it's kind of flattened a lot because so many people are doing it. So I don't think it's one of those things that I would say like gung-ho go for it. It sort of depends. Yeah.
Alex, go ahead.
Great.
I just thought this was the perfect opportunity to share that a month ago I wrote a very polarizing article on BP called Why Airbnb is Overrated Right Now. And and I'm sorry to do this to you, but there's a
reason why I love you, Alex.
I can't help myself. I'm so sorry. But one of the risks, we all were, there's regulatory risks and whatnot, and nobody could have predicted this, not myself, but it is important to take this moment to, everybody from 2008 has only been winning. Our market's only been up. And so there's certainly investors in this group that have been invested before 2008, but there's an economic phenomenon called the turkey problem. And a lot of investors are suffering from this right now. It's a misassessment of long-term risk. And so I'm bullish on Airbnb in the long run but it's also important to know, like, Airbnb hasn't even IPO'd yet. That's how new they are. They wanted to do it this year. They ain't going to do it this year. And I don't think that this is going to negatively affect Airbnb in some way. It won't go away for certain. But it is a noticeable, well, I'm just gloating because I wrote this article knowing, look, it's very difficult to build an entire business model around a business model, Airbnb, that's new. And the risks are unknown and forthcoming. And so I think this is, I don't think it's going to take Airbnb out, but I do think it'll calm some of the, let's build a whole business model around it, brand new.
Go ahead, Ziona.
One thing that I think was really great about Airbnb is that it allowed me to get some properties that I could pay off in 3 years, 5 years, and then do whatever I want with them. So go medium term, go long term. So it sort of depends on what your strategy is. And I'm definitely a lot more conservative. A lot of real estate people are all about leverage. I come from the fire side, and I'm all about frugality and getting things paid off and having all your ducks in a row. So it's just a different strategy, but I completely agree. And that's why I'm loving this opportunity to go, okay, let's see how it really is with nurses. Let's see what it's like to rent your place as a location for shoots. Let's see how we can grow and evolve, because I've been doing this almost 10 years and it's getting a little stagnant. So I agree. I like Alex's fire.
Yeah, I think the Airbnb people that are going to hurt the most are the arbitrage folks. That's where the real risk, not for the arbitrage folks, but for the person who actually owns the home is, because they can just walk. But in most cases, so I'm rental arbitrage right now, but I live here. I'm house hacking through Airbnb because my landlord said that I could short-term rent, but could not sublet. So okay, whatever.
That's the same thing I'm doing, but not in my own house. I'm actually renting an apartment in a big complex and then Airbnb-ing that out.
Yeah, so I rent a condo, but it's a separated condo or whatever. So townhouse, whatever.
Right, yeah. Yeah, so mine's different. I don't live there or whatever, but I rent it on a month-to-month lease, all utilities included. So my only monthly expense is 1 month's rent payment. And then I Airbnb it the rest of the time, and I had to furnish it and stuff like that. But I can terminate. So as a short-term investor, it's safe for me because I can terminate that lease if I see this being a long-term thing, and then the owner just puts a long-term lease in that unit instead.
It's nice because in my head, all I have to do is pay the rent that I would be paying anyway. Every Airbnb guest I get is just a discount for me.
Mm-hmm. Yeah, however, even safer for you. Yeah.
If I was a Airbnb, a rental arbitrage guy, and I was all of a sudden told that I was going to be footing a $3,000 bill and I had 6 cancellations in a week, I would be pretty worried right now about, well, I wouldn't be worried per se. I'd be saying, do I break that lease or not? Depending on the reserves I held. And then that screws, so what the people I would really be worried about right now, and Alex mentioned this yesterday and when we were talking, are not the people doing the Airbnb, but if you are a landlord and you rented your home to a rental arbitrage investor, I would seriously consider what happens if they break the lease and you're not going to have, it's going to be hard to find tenants because people aren't trying to move right now.
Chad, go ahead.
Yeah, and in the building I'm in, it's a 40-unit apartment complex. So 1 unit is not going to hurt them. And I think that's why he has let me do that. And it's a very, it's not a high income area at all to do this in. But we're going to keep it. We're going to hold this out and keep going. We actually thought we were in a great position. We had someone who was getting their house remodeled the next 2 months. So they lived local. We're going to move in there starting April 1st and stay until the end of May. And we're like, great, we don't have anyone traveling to here. Well, today they canceled because New York State just got put a hold on construction that is non-essential. So they're no longer having the remodel on their house. So now we have those 2 months open. So it'll be interesting to see if any of those get booked.
Chad, go ahead.
So my comment's not Airbnb related, but you guys jogged my memory on one of the opportunities that I meant to mention earlier. I think anytime you have a downturn, you got to identify what are the dominant phenomenon that are happening in the market. And we've been talking a lot from our perspective as landlords that we're having a hard time getting rent from tenants, or we're concerned about that. And so I think one of the opportunities we should all be looking for is, if you do have liquidity, if you do have cash, be looking not only out there with MLS kind of stuff, but even in your own network of investors that people who have cash issues, or they can't make their payments, or they're concerned about making their payments, can you, as a liquid investor who has cash, either loan money to them or buy one of their properties? Or I've seen really creative deals in the past. We use a self-directed IRA, and let's say Paul had a property that was worth $300,000 and he owed $150,000 on it. So had a lot of equity in the property. I would be willing to buy an option on his property, for example. Let's say he needed an extra $6,000 or $10,000 or something to help cover some negative cash flow. He might be willing to give me some of the equity in his deal, and I buy an option to buy half of his deal for $10,000 or something. And so I could buy a lot of equity for a very small, using leverage, using creative financing tools like options, leases. You could go and lease a property from a landlord and cover it, but it might have negative cash flow for a while the tenants aren't paying, but then you could control that property, get an option. So the more like tools you have that are creative to help people solve their cash flow issue, you could pick up a lot of equity without a lot of risk as well. So that's an opportunity to be looking out for.
I completely agree. I'm very much cut from the same cloth as Chad. We've gone to a lot of the same trainings, and I do a fair amount of that kind of stuff in my IRA. And there's a huge opportunity. I don't think we can quite overstate how much potential. There's going to be a lot of people who are cash poor all of a sudden, and if especially if this lasts for 3 or 4 months, that you could be a person that you could use your IRA to potentially buy a property, to get into deals, to be a private lender suddenly, and get some pretty phenomenal returns. One option is what they call a 10 for 12. You say, if you need $6,000, I'll give you $6,000, and then you pay me $8,000 over the next 12 months. That's one way that you can get. You're taking an assignment of rents from them. That's one way to do it. Lots of opportunities here to use a relatively small IRA that may have less than $50,000 in it and grow it significantly. Alex, you raised your hand?
I didn't get to do my opportunities, and I actually wrote some down while we were talking. So
okay,
we moved on, but then Chad brought it back up. So I had real quick, I got 4 real quick. I'll go quick. I think the big opportunity in rentals is going to actually fall because of this. Everybody knows now that if something bad happens, we can absolve rents. And so I think it's going to put a scare in the rental market. You're certainly not going to see rent prices go up like you have been. So I think the rental market is going to be a little scary. And I also think it's going to be regional. That's going to be affected regionally. So I think I'm going to move towards flipping. I was already kind of doing that anyways, but I'm going to move towards flipping. And it's going to piggyback on what Paul just said. It's going to be a factor of liquidity. People are driving prices up right now, and margins for flips are down because liquidity is so high. So as liquidity dries up and buyers dry up, prices are going to come down, buying prices. But I don't know that the retail side prices are going to fall that much. So I think the margin for flippers is going to come back up if you have access to cash, which is what you just said. The other thing that my company is starting to do, which is a little bit of a weird pivot, is we're actually moving away from rehabs on investors, and we're going to start trying to capture retail rehabs. And there's a really neat package I'm putting together. My guess is people are going to be indoors more. They're going to get used to it. And they're gonna, and when you said when the doors open up, I think people are gonna want to do some spring cleaning. So we're gonna plan on doing rehabs through the whole spring and summer for retail clients. Again, regional. If you guys don't know this, I moved back to North Carolina in November from Las Vegas. I miss Las Vegas dearly. I think Las Vegas was a place I couldn't invest because I came in too late in the market. And I think Las Vegas is going to get absolutely crushed by this. If you don't know, 440 casinos in Nevada have been shut down mandatory for 30 days. I almost want to drive to Las Vegas to take pictures of the strip empty because oh my God, we're never going to have another opportunity. The opportunities in Las Vegas are going to take months to undo though, because foreclosures, dude, if you miss April's payment and then you never make another payment, it ain't till next December that you're actually gone and the house is on the market. So I say all that to say regional opportunities will pop up. And so I don't know about San Diego or whatever, but I'm looking at Las Vegas specifically. And the last one is, and this is a good example. I've been doing these Zoom chats all week. I've been doing a ton of YouTube. I think over the next 15 years, 20 years, intellectual property is going to have the more value than any amount of real estate you could ever buy. Mindy knows it dearly. Ashley knows it. David, Dust, everybody in this room knows it because we all invest heavily into our own intellectual property. And I think people being inside are going to look at content creators more heavily now. And this is exactly why I assume Paul is doing this event and why I've been doing these Zoom chats all week. intellectual property is going to become more about, like, that's what I'm learning. I'm moving away from real estate. I'm going to continue to do real estate, but I'm leaning more on my intellectual property than I am on real estate.
Content is king, not cash.
What is it?
Content is king, not cash. Forget cash. Just do content.
You're joking, but like social currency,
It's powerful.
almost more value than cash. And so I just wanted to put that out there for anybody who's like stuck indoors right now. Like, now is the time to become TikTok famous. Now is the time to get on YouTube. Now is the time to start your podcast.
You got the
Dustin,
time.
I don't want to hear it. You're just jealous that you can't dance. Like,
I had so many people telling me you should be on TikTok. You should put TikTok videos out. So I gave it a shot for like maybe 2 days. I had to get off. That's just
I'm
me.
just too
I'm
old.
old. Apparently, I'm just old. I couldn't take all the videos. Okay, I'm done. So I got off.
I have
Alex can do TikTok for sure. Yeah,
He can.
I've had a couple videos actually take off on there. I mean, I think the most I've ever had is like 32,000 views or something, which for how small my following on it is incredible. However, my big problem with TikTok is that I got on it like as a joke, and shit's addicting.
You can't get off.
I will go to post a video, and then I'm like, oh my God, it's been an hour. What am I doing with my life? So I refuse. Like, I will now record a video or do whatever, and then like go in, upload, and like leave. Like, I won't let it play. I have to like, just
especially now with all the quarantine
There's
memes
nothing
and
else. It's
the
so
toilet
bad.
paper and
It's
everyone's
the
quarantine
toilet paper-
fashion.
It's so bad. I mean, there's like toilet paper mummies running around on TikTok. It's crazy, and it's like, I feel guilty for enjoying something so pointless, but then I'm like, oh my gosh, what happened with my day? So I've been avoiding TikTok because I just waste time on it.
And Alex getting loads and loads of people watching his TikTok videos. He realizes they're only like 12-year-olds that are watching them. So, hey, there we go.
12-year-olds buy houses in 6 years.
Or
that's a good point.
Long play.
So that's a good point. And I don't want to take too much time up with this nonsense, but it is something I've been thinking about for a long, long time. And, you know, nobody thought YouTube was going to be what it is in 2009. And now you can't live without it. And let me tell you something about YouTube. It's brand new, right? Like, the people who are famous on YouTube are idiots, right? And so there's a lot of market share for people who are, well, anybody.
So you're saying I have a chance?
I'm saying even Paul has a chance, right? I mean, look at David with that mustache, 32,000 views. Come on. So I just say, like,
fair,
TikTok,
the video was my stepson dancing hula, but
This is going downhill
TikTok is
fast.
nonsense, and it's for 12-year-olds.
It sure is.
All right. You know, I agree with a lot of this, that content is king, and social media is, you can consume it or you can produce it. And if you are producing it and not falling into the trap of being a consumer for it, it's only going to go upward, so on. And this weird thing that we found ourselves in only has compounded that, not the other way around. So with any kind of disaster, some situation like Zoom has gone crazy. Like, I mean, their stock's gone crazy. Boeing's not. But, you know, you adjust to the market at play. One thing I want to make sure and cover before we get off here, I let each of you guys give your chance to say where we can find you. And I have some last comments, but I want to make sure we cover the fact of the SBA loans that are available for rental property owners. So in all 50 states, you can go to disasterloan.sba.gov. And if you own rental property, you are eligible for getting a working capital loan at 3.75% interest for 30-year AM. I don't know what the requirements are and what kind of, there is an application process, and it's a typical government website, and it's kind of annoying. Someone said they just submitted theirs. How long did it take you to do it? You have to enter each property individually, and the website's kind of slow, or at least what it was for me. So he said it took too long, or Rocco said it took too long. So it's a government process. I don't know how fast you get your money, but I do have a link to a friends of mine who wrote a free course. I have not finished it, but the part I have seen was very good. And I'll paste it in here for everybody.
I spent the last 3 years working in SBA lending. If you have any questions, I don't know about the changes because I'm not in banking now.
Yep.
So I don't know. I can't speak specifically about the changes, but I can speak about the SBA culture. And I do have a lot of connections I talk to every day that are dealing with the new changes. So if you're in California, Colorado, Nevada, Texas, Oregon, Texas. In those places, I have the #1 West Coast lender for SBA was my old bank, Meadows Bank. If you want a connection, I can help you out. But I don't know. I'm not on the specifics of the changes, and I'm not in the battlefields like I usually am. So I'm a little out of my depth. I don't want to say too much, but I can speak about some of the SBA culture, if that helps, like how they may do
Sure.
things.
So that's something you can talk to Alex about. To check out this course that some friends of mine wrote. I'm not attached to it. I didn't create it, but take it for what it is. Just a resource for everybody. 3.75. I can't easily go out and get 3.75% interest anymore unless I'm getting it from a seller for owner financing or buying sub 2. This is another access to money for working capital. There is no requirement for what you use it for, as I understand it. So go do your own digging and know your thing. So I want to give each of you guys a chance to share how people can get a hold of you. And actually, you know what? I'm going to make it easier. I'm going to save some time. We're already gone 10 minutes past our time. Anybody, you can text the word investor to the number 33777. That gets you on a list, and I will send out an email to everybody who was on this website. Yeah, she says I'm techie. So
Teach me your ways.
Test the word investor to that number, and I will share everybody's links and resources that they've shared with me, and the recording of this webinar. And kind of with that, I would like to close with the idea that first of all, I appreciate everybody showing up as co-hosts. These are all friends of mine that I've met through various places. There's a lot of wisdom in this room, and so definitely make sure and to make use of them and get a hold of them if you want to. And I'll personally offer a personal consultation with anybody who's on here that wants questions, and I'm sure these guys would do something similar. I'm not going to speak for them. And basically, we want to all make you guys successful, and there will be a time. This is history's being made right now. We're in the middle of something that you will remember this for years to come, and there will be either those who did well with it or those who failed. And so which side of history will you fall into is really kind of up to you guys. And we've given you a lot of resources to help make that possible. And so you could potentially set yourself up to live a life completely of your own design as a result of this situation, because now all the opportunities will be popping up. So practice all the social distancing that we've been talking about, that we've all been told to do. Take care of your family and loved ones. You are spending time now with the people that mean the most to you, and you can potentially change your family's trajectory if you take the attitude of approaching this as a spirit of service versus trying to take advantage of people. What are people having trouble with right now? You could be the solution. So that's the kind of pivot that I would suggest everybody try and do. And again, thanks everybody for your attention, and we will call that a night, and I'll share the recording with anybody. Last words from anybody else?
Thank you.
Well done.
Yep.
Thank you.
Awesome. Goodbye, everybody. Bye.